We have finally arrived in this banana zone. Charts are important, but what is significantly more important is US inflation, interest rates, and monetary policy. And we are already seeing the first expansion of money in the USA, but no one has reported on it yet. How and what is happening right now is extremely crucial. We'll take a look at that in a moment, but first, give the video a like and leave a comment so that the video reaches as many people as possible. We are now going to talk about this banana zone. The banana zone is pretty much the last bull run phase where we head towards the peak. This is the most crucial and exciting phase. Every time before we reach the banana zone, we first had to break through our all-time high. But there, we also had months of correction phases, where at times, hope was naturally lost again. When we slowly reached the banana zone, where we are already in now, we also had two major corrections. Really? Here we had two corrections, and here we had another small correction. And here again, I find this cycle, but you can't include the very first cycle here. You can compare it better with 2017-2021. There, in the banana zone, we had two very, very large corrections that lasted for several weeks. Currently, we are in the correction phase, and it looks to me like this correction phase is slowly coming to an end, piece by piece. This doesn't mean that we will reach a new all-time high in 2 weeks, but we had these correction phases every time. In the banana zone, we had two significantly large corrections. This is now our first correction that we are currently experiencing. From there, we will go up and we will have another correction here. And from there, we will gain the last momentum and reach the bull run peak. And the plan here is that this will stretch over several months. They want to delay it in certain phases. Nevertheless, it is good and nice to be in the zone we are currently in, because it simply tells us that we will start quite soon. Typically, the banana zone occurs when we have significantly broken the all-time high. And we did that last year when Donald Trump won the presidency. And now we are simply in the first correction phase. I think that is definitely something to pay attention to. And I believe that in the coming weeks and months, everything will be decided, technically, for this crypto market. Whether this will really be the normal 2017 cycle or if we are moving into a bear market from now on, then we will look at the whole thing technically. We'll just see, right? On the weekly chart, we have the 200 EMA here, and we haven't broken through it even once so far. Look at this. In this cycle alone, we have tested it over 3 times, maybe briefly broken below it, but never sustainably. By now, it is simply a huge support line that we must not break through. That's why, in my opinion, so much is being decided right now. If we should break through here sustainably, we would have to test the 50 moving average in terms of time and data, and that would be down here at $45,000. I think no one is keen on these price targets for Bitcoin. I mean, we've seen in the past, it was tested every time. But if we break through sustainably once, then we have also ushered in the bear market. At the moment, we have not yet reached this point. We are, of course, also hoping that this zone continues to hold. But you can clearly see that a lot is currently being decided, whether it will really continue sustainably or if this cycle is completely different. And you all know very well that we are slowly seeing an increase in global liquidity, which is of course nice for the markets. The increase in global liquidity started about 8 to 10 weeks ago, and slowly this money is also reaching the markets. That's nice and good. I told you in the video yesterday that global liquidity is rising mainly because the dollar is falling so sharply. This is partly true. But I also need to correct myself a little. I have pulled out a chart again here, and here you can clearly see that global liquidity has not yet reached a new all-time high when calculated against the US dollar, but we still see an increase, and that is very important. And I mean, the capital inflow we have seen here is not insignificant. That is already the right path. Even more important, of course, is that we see the capital coming from the USA, because the USA had a very, very tight monetary policy. This is changing this year, as we have already noticed. But now I'll show you that it might have already changed in the background, because the net liquidity of the Federal Reserve has increased by nearly $500 billion since February. And we don't really notice it here. No one is really talking about it, because we still officially have a tight monetary policy. But we are slowly starting to see it. They are giving themselves financial injections to refinance their loans and certain things. However, we officially do not yet have quantitative easing. Accordingly, the markets are not reacting very positively to it yet. What we are seeing here in terms of liquidity is considered a one-time thing and not a permanent solution. We have seen all of this because the USA still has massive debts. And these debts need to be refinanced this year, but no agreement has been reached there yet. This is also related to the government bond interest rates, which Donald Trump wants to lower for this reason. But we needed money, and the Fed simply increased its liquidity by nearly $500 billion. And they did it almost quietly and secretly. However, they absolutely need to reach an agreement this year. And then we would have a loose monetary policy with a massive expansion of money to refinance the debts here. And this will be the turning point in this cycle. From the day we officially implement loose monetary policy in the USA, we will head towards bullhorn peak in the following months. According to estimates, we should find a solution for refinancing the debts by August this year. And from then on, we would essentially have this loose monetary policy. This is extremely important to understand, that the Fed is already dependent on new capital, and this capital is also flowing back into our markets. They are already printing capital, but currently it is said that this is only temporary and not a long-term situation, but just wait and see. The Fed itself has announced that they will intervene directly here if they run out of liquidity. And of course, that's nothing new. The debt ceiling has been raised about 80 times or so in history. It will be the same this time again. So far, we have no agreement. However, we see that they are slowly supporting themselves with financial injections to prevent the system from collapsing. But for us, this ultimately means new, fresh capital again. This is probably also a reason why we are seeing such a nice breakout in global liquidity. This of course benefits us again. But as I also told you, global liquidity is also increasing because the dollar is losing value. Look at this correlation. Here we are rising in global liquidity. Here we are absolutely failing with the dollar. That's how strongly these things are interconnected. As the dollar weakens, other currencies become stronger. And we see a theoretical expansion of money, which is partly only theoretical and not real. That's kind of the case here right now. We see the dollar losing value, while global liquidity is rising. That's why you can't completely rely on it. You really have to look at these real, actual numbers. And nevertheless, we simply see with the US dollar that we are so low, as we haven't been for a long time. The dollar has fallen significantly, which is actually better for our markets in the long term. In the long term, this will lead investors to invest more in risk assets. And the last time the dollar fell so sharply, we saw a rise of over 500% in Bitcoin in the following months, because people became more risk tolerant. And we are slowly entering the zone where people are definitely starting to become more risk friendly and prefer to invest in assets like Bitcoin or gold. With inflation, we have also slowly come down nicely, as it should be. We are no longer in panic mode with inflation, and we are slowly reaching our target. Almost reached the 2% mark, and from that point on, we would start printing money anyway, which is why we are also anticipating more interest rate cuts. That's why I'm telling you in the short term, sure, we've had all this pain with tariffs and such, but a huge foundation is being built right now for this gigantic bull run. And as I told you, by August at the latest, the USA will have to refinance its debt, one way or another. And when that day comes, we will hit another bull run peak, because from that day on, an incredible amount of fresh capital will be injected directly into the markets. I hope you understand that we are currently in this corrective banana probe, which only lasts for a few weeks or months. And even there, we will break out in the long term. Everything still looks good so far. But as I said, the monetary macro environment is being set up really nicely right now. Of course, the sentiment isn't bullish from one day to the next, but the foundation is currently being laid for this organic, massive bull run that we are all now expecting. For this last phase of euphoria, we simply need new, fresh capital so that the altcoins can finally perform. I hope you enjoyed this video. It was a lot of work, which I gladly do, but I would be extremely happy if you appreciate this work and give something back to me in the form of a like and a comment. Until next time, friends. Bye.